Hi, this is Hyperwave. I'm Leah Wald and I'm here with Tyler Jenks. And today we're going to talk about election cycles and how that affects the stock market. So, the full 4 years of the election cycles and how the stock market specifically responds in regards to understanding just why hyperwaves are so unusual and that they indeed signal real shifts. So, after that, we're going to then go to the Bitcoin price. So, jumping right in, Tyler.
Great, thank you, Leah. Um, Today is very quiet once again in all of the markets. Bitcoin, the stock market, the gold market. Stock market was up about 75 points. Gold was up about $6 on the close. Bitcoin was flat, but it got a little bit stronger towards the end of the day, but made no real progress in terms of all of the things we've talked about, where it needs to go. The good news is it hasn't slipped back, and we'll take a close look at that. I'm going to show you a trend channel that we have been in ever since the lows at 5,900. And then, as Leah said, I spend several hours a day, I have for many, many years, looking at long-term charts of everything. Things that are relevant to the present, but also just historically. And I'm going to share some of those with you today very quickly to make a point about Bitcoin and to make a point about Hyperwave. So let's go to screen share and we'll pull up our old favorite, which is a short-term chart of Bitcoin. And here we have it. And this is what we looked like on an hourly basis over the last 3 days. Here's our high at 8,995. I've got a line coming in here that I'll explain in a minute, which is the bottom of a trend channel. Notice that this is today's action. And we slowly worked our way higher. We're higher than we were on this low and this low and this low, but we're still below this peak at 9,000. We've got to get above that, and time is running out to a certain extent. But if you will notice at the bottom of this chart, we have two green bars, or about an hour and a half's worth of the MACD turning slightly positive. It hasn't been there for 24 hours. Maybe we'll get some follow through later today. Going a little larger, I will be able to show you what this trend channel is I'm talking about. Here's our low at 5,920. We broke the bottom of this trend channel, which in itself hadn't been created yet, but it's also not too far away from my 6,300, which is the drop deadline on Hyperwave. We've been in this channel now for, I'm going to turn to a daily chart so you can see that we've been in it for about 8 days now since the low. And if we can break out to the upside out of this, we will quickly get to our 9,000, 10,000, and 11,000 horizontal targets that we've been talking about. So the down and dirty very quickly about Bitcoin prices today is still working slightly higher, taking its time. No real news there. I'm going to now go back to the very long-term view of Bitcoin running from 300 all the way up to 20,000 and this huge pullback. I have my phase line in for a hyperwave going all the way back through these lows. Once again, you can see where we penetrated it to the downside, but then closed above it. So the war is taking place above these lines. I've also put all of our Fibonacci retracement lines in on this chart. And the reason I'm doing that is so we can quickly take a look at the overall hyperwave analysis. I introduced this chart yesterday, very similar to the one we had before, but here we've got the three red numbers, 1, 5, and 7, and the four green numbers, 2, 3, 4, and 6. And we're debating if we're in 5 going up into a 6, or if we're still in a 2 or a 3. We said that GBTC, the Bitcoin Investment Trust, is clearly still in a 2, and that makes no sense if Bitcoin is actually further along, and I don't believe that it is. Let's take a look very quickly at 2 hyperwaves and then look back at our chart. This is the hyperwave of the NASDAQ through the 1990s. We're going to look at presidential cycles in just a second as this was building up, but very clear phases 2, 3, 4, 5, 6, 7, and down. And we looked at another hyperwave, which is the 30-year T-bond yield from the middle of World War II all the way till today, where we ran from the bottom, we went up into the phases, the acceleration, the correction, phase 5, the up in 6, and a 30-year long period. Now, the reason I'm going to go off screen share just for a minute so we can talk about why this is so important. Hyperwave is very rare, it's very unusual, and when it occurs, it is signaling shifts in finance, in economics, in politics, and in the social contract. Each one of them represents a tremendous shift that, while it is going on, is very difficult to recognize. Only looking back do we understand the historical importance. So I am putting Bitcoin in the same category as all interest rates in the United States over an 80-year period, including the tremendous run-up in rates and the 30-year bull market in the bonds or bear market in rates that is still going on today. We might be just slowly pulling out of it. But that one hyperwave was saying that the world economy in interest rates and inflation went through a huge boom and bust cycle. So it's very clear why that hyperwave formed the way it did. We've shown you hyperwaves in gold, in silver, and all of that had to do with the 1970s getting off of the gold standard. We've shown you very quickly hyperwaves of the Japanese stock market, when for 20 years Japan went from a developing country into one of the greatest economic powerhouses until its hyperwave burst in 1989, and has been through a series of recessions and some would say depressions in asset classes like real estate and the stock market ever since that hyperwave broke. So the reason I'm trying to give you this context is hyperwave relative to Bitcoin is saying something important about cryptocurrencies and Bitcoin. And the flip side of that is it's saying something extremely important about fiat currencies. So now we're going to do something very unusual. And I'm going back to screen share to show you some interesting presidential cycles. And we'll do that by starting, well, let's go back to this period, which is the father Bush, 1988 to 1992, and the end of Ronald Reagan's term, 1984 to 1988. This is the stock market during the 4 years of Reagan's second term. This is the crash in October of 1987. Notice that the stock market from the beginning of the first term was in a very powerful move, which happened to be a hyperwave that was a fractal smaller than the enormous hyperwave that we were going to see in the NASDAQ during the 1990s. In the 5 best years ever of the US stock market, 1995 to 1995 to 2000. The crash of 87 was the largest daily drop in history in the stock market. It was down 22% on one day, on Black Monday. But look what happened leading up to that. And then as we go to the next presidential cycle, where Bush takes over in 1988, the stock market starts on the bottom left-hand corner. It happens to be around $2,100 and ends up at the end of Bush's term at $3,200, or up 50% during this 4-year period. Very often you will see in the first 2 years of any president, it doesn't matter if they're Republican or Democrat, someday it won't matter if they're female or male, if they are black or white, what their politics are, if they're independents. All of the things we look at by looking at long-term charts minimize the effect of any individual. Now, at the beginning of Clinton's first term, following this run-up under Bush, following the crash in 1987, which was followed by the end of the hyperwave in Japan in 1989. Just to give some context, once again, from the beginning of the presidential term to the end, there's a tendency for the markets to go up. And we won't get into the specifics of why that is, but again, it is independent of politics. It has to do with the Federal Reserve and the US Treasury and printing money and new budgets and attempting to get voters to be ready for the next term, and on and on and on. This is the second term of Clinton, starting at the bottom left as he entered for his second 4-year period, right through all of the controversy. The market shrugged it off. Why? Because if you remember the very long-term charts of the stock market, the market tends to move up at approximately 10% per year over very long time periods, regardless of what's going on with the rest of the world. Now we come very quickly to the Bush years. And let's put these in context. Here's the first time we see, right from the beginning, the market struggling and dropping sharply through a very deep recession. Well, obviously, a lot of things were going on. Number one, the end of Clinton's second term we had this. It ended in 2000. This is the dot-com bubble. The dot-com bubble took 5 years to develop. And what 5 years were they? They were during the last Clinton administration, 1996 through 2000. They actually started back in the early 90s, and the boom in the stock market began in 1995. From 1995 to 2000, the stock market climbed at 23% per year compounded. It has never done that before in history. Well, a big part of that obviously was this technology boom that had started in the 60s, accelerated in the 70s and 80s, but really began to take off in the 90s. And by the end of the 90s, there was mass euphoria. That's what causes hyperwaves. Some tremendous shift in technology, politics, economics, finance, and the social contract that shows itself in various asset classes. But notice that it runs through all presidential cycles, because most hyperwaves are anywhere from 10 to 30 or 40 years long. So not knowing who is a Democrat and who is a Republican, you would have to feel a little bit sorry for the person that came in after Clinton's second term. Why? Because this was the end of the boom. And not long after this was September 11th, right here, 2001, with the attack on the Twin Towers, driving us into a recession. And a lot of people say the reason all of this happened, a 50% drop in the market, was because of 9/11. Obviously, that wasn't the case. We just saw what caused it. What caused it was the end of the 5 biggest up years in stock market history. All booms result in busts at the end, and it does not respect who is sitting in the White House. Okay, now in the first term, from the beginning of the 4-year period all the way to the end, there is no positive return in the market. True, we dropped all the way down to March of 2003 and fought our way all the way back up close to where we started. But by the end of the term, no one for 4 years had made money in the markets. He was reelected, and it started off really nicely, like the other presidents were able to do, starting from the bottom and working its way up. Unfortunately, for this particular president, the last year and a half of his term was marked by the financial crisis because of the misdeeds on Wall Street, backed by the misdeeds of Congress, pushing all of the financial institutions to get as many mortgages out and get as many people into houses as they possibly could, regardless of credit. And we paid for it. And Bush and the Republicans paid for it, because by the end of his term, what was handed over to Barack Obama allowed for the very strong response by the Federal Reserve in dropping interest rates to zero under Alan Greenspan and then later under Bernanke and Yellen, which caused another tremendous expansion in the US stock market. This kept going up until the end of Obama's second term. And for the last 2 years of that term, there was basically no improvement in terms of stock market. And the economy had grown throughout this period in the slowest rate that had occurred since World War II, coming out of a recession. And it wasn't until the next president, Trump, stepped in that all of the work that had been done in the previous 8 years in terms of saving the financial system, trying to get the economy going, trying to bring employment down, began to really bear fruit, along with promises in terms of other things that could be done to make sure that the economy gets back to more like a 3% GDP growth instead of the 1 to 1.5 that we've been stuck in for over a decade. And what happened? The largest percentage gain by any president in their first term. And now we're only looking at a 1-year chart, obviously, because he's just finished his first term. So let's put all this together very quickly by going back off. You can find all of these charts, by the way, on a fabulous site called stockcharts.com, and an infinite number of others that get very, very specific. The reason I bring them up is only for one main point, and that is I want all the spotlights to be put on the fact that Bitcoin and cryptocurrencies are saying that we are right now, this moment, for the last 10 years and accelerating right up to today, in some sort of a massive shift, one of the biggest I have ever seen in terms of economics and finance. And it is highlighted by what is going on with Bitcoin and the cryptocurrencies. And the reason I can say that is because of all these charts we just looked at. It is very clear that it's rare for a hyperwave to develop. And when one develops so quickly and so powerfully, it has all sorts of messages that we have to think about and react to. Not only day to day, what are the prices of Bitcoin doing, but what the future holds, and what does it say about interest rates and fiat currencies and the gold standard. And all of those variables are in play right now, and we don't know the outcome. But we do have a map, and that map is that archetype of how hyperwaves move and act as we're going up, as we're correcting. And that's what Leah and I want to share with everybody on a daily, weekly basis through these vlogs. So thank you for listening. And Leah, back to you.
Thank you, everybody, and until next time.
Bye bye.